Well, March break is about to kick off, and likely thousands of travelers will head out on road trips, many of them perhaps driving long ways, even to Florida and other destinations south of the border. Let's find out what they may be paying at the pumps in order to get there. We're joined by Roger McKnight, Chief Petroleum Analyst with Enpro International. Roger, it does tend to be seasonal, right, when it comes to demand and when people really fill up a lot. Is March break a particular time where we do see prices driven higher by higher demand?
Yes, that's certainly true. It's true for gasoline, but it's especially true for jet fuel as people try to get out of the country even during this weather. But refinery runs have got a certain amount to do with it. This is the time of year when refineries go into sort of a hibernation mode to get ready for the driving season. So that tends to drive up prices at this time of year as well. I've been doing this for about 16 years, and in 15 of those years, prices go up at this time of year. But I think I have some good news for people across, consumers across the country. I can't see prices increasing over the short term right across the country.
You don't see prices increasing?
I see the prices decreasing.
Decreasing. Okay. Well, yeah, that is good news. We'll get to it, sort of the breakdown city by city in a minute. But maybe we should just touch on jet fuel as well. If people are, maybe it doesn't matter so much for the trip that they might have planned now, but maybe they're thinking even ahead to the summer and when they're going to be making travel plans then. How are jet fuel prices doing right now?
Jet fuel prices are increasing rather dramatically because of the increase in demand. It's, as you say, it's a seasonal thing. As you get further into the year, I think crude prices are going to start increasing in the third quarter, getting into the summer and into the fourth quarter, and that should drive prices up rather radically high. I think we're at $77 a barrel right now. I think you could see it approaching 100 in late August, September. That will drive up prices by about 14 cents a liter across the board, all dimensions.
Yeah, when you're thinking about oil prices right now, Roger, what are some of the biggest forces at play here?
Biggest force at play insofar as gasoline prices or as far as crude prices?
Well, crude prices, and I mean, we got to worry about crude prices to worry about gasoline prices, but maybe crude.
Well, the holy grail of information insofar as the traders are concerned when taking a futures price in gasoline, diesel, or jet fuel is the U.S. inventory part, so the EIA. And if I look at that today, I would see that supply is down for gasoline and crude, but demand is up for gasoline and jet fuel. So logic would say that you got a drop in supply and an increase in demand, therefore prices should go up. Unfortunately, it's not the EIA, or fortunately for the consumer, it's not the EIA data right now that's the holy grail of information. What we're looking at is the Federal Reserve interest rate structure. Okay. If that goes up 25 or 50 basis points, as the rumor has it, that'll be further intimidation for the consumer to back off and stay at home and count their pennies. And for that reason, I'm calling for prices to fall right across the country.
Okay, Roger, take us through the good news then.
Okay, starting in Happy Valley in Vancouver. We're going down 3 cents a liter in the Lower Mainland and Vancouver Island to $1.81, which may seem astronomical, but they have an astronomical tax structure. Alberta down 2 cents to $1.32. Saskatchewan down 1 to $1.56. Manitoba down 2 to $1.54. Then we get into the meat and potatoes part of the country, and we're going to go Southern Ontario down 4 to $1.46. Montreal and Quebec City down 3 to $1.62, and the Maritimes down 3 to $1.53. So I can't see any reason for prices to increase. It's the Fed is calling the shots here.